All right. Good morning, everybody. Welcome to Forex.Today. Hey, the YouTube community of more than 20,000 foreign exchange traders. Holy smokes. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Thank you for coming. Thank you for being a subscriber. If you're new to our community, hey, why don't you consider subscribing? There are probably somewhere around 6,000 videos on YouTube associated with my work. Yeah, 6,000. So if you subscribe, at least you can get the new ones, huh? Anyways, thank you for being here. Thank you for your participation. You ask good questions. I try to deliver reasonable answers. I like to think that my expertise is in both technical and fundamental analysis. And after doing this Forex thing for about 20 years, I think I have a little bit on the psych side, the psychological side. Only that I've probably have been through every up and down there ever has been and ever will be. So let me know how it can help. Okay, we'll look at the yen pairs today. We'll look at the dollar pairs today. We'll look at gold and oil and Bitcoin. And that's pretty much that. That should cover it. But if you have a burning question or a burning desire, perhaps I can address that too. Just ask. If I don't get to it, there is an army an army of FX boot campers that have skills and experience that could probably address your question as well. So you're not alone, my friend. If you look at the description below the video, you'll see a link to fxbootcamp.com. You will see a link to my book, Strategic and Tactical Forex Trading. You will see a link to tradersway.com, an ethical foreign exchange broker with a business model based on a symbiotic relationship. What does that mean? They really hope that you succeed because successful traders, well, they trade more and they trade more often and they trade for longer periods of time. Many brokers out there are based on booking you and hoping that you blow up your trading account so that they just keep all that cash. Short-term and short-sighted. Traders Way is different. I recommend them, tradersway.com. So look for all those links in the description. Awesome blossom stuff. So let's get on with it. Gold, oil, and Bitcoin, eh? Gold, oil, and Bitcoin. I think we'll start with the yen pairs first. Oh, looks like we can. I have too many. My resolution's too high. Sorry about that. Let's change that. Then I have to redo this. Hang on now. There we go. All right, cool. So we have yen weakness. Very cool. And check it out. We had a nice re-up, if you will, on the 4H. If you drill down into the 1 hour, holy smoke, something happened there within that hour. Well, we are tiptoeing ever so closely to 150. And many believe that, well, there's intervention out there somewhere. And that's the most important price on any chart that we're watching right now. So let me go back to the poll and see what you guys are trading. Non-news? Steve says, hey, non-news. Oh, okay. %70 of you guys are on dollar. and only 18% on yen. That's interesting. Okay, let's go see what's up with that. Oh, now I got to redo all these windows. Hang on. Okay, dollar is neutral. Yen is falling. And you're not interested in yen, really? That's interesting. Hang on, these are just crazy dirty. By the way, I'm wearing cufflinks for you this morning. Oh, because you're my sweet baby. That one says buy, I think, and that one says sell. Hang on, just cleaning the glasses. Stevie was already on yen. That's cool. Sean says, hey, isn't gold and Bitcoin simply a dollar trade? Yeah, in many ways. Yeah, I would agree with that. Let's see. No, this was the buy. Buy. Sell. All right, so interesting. Yen is tanking, and you're not interested by and large. That's interesting. Oh, Muhammad likes... Do you even... Not many people know this watch. You're a watch guy? Do you know that one? Oh, by the way, I can't get the... I can't get the whole package in there. The cell. Oh. Let's turn that up. Turn the cufflink around. There we go. There we go. Now you got the cell, the watch, the skulls. Okay, do you know that one? Anyways. Yeah, anyways. What does the skull mean? I started... my wife hates it, by the way. Oh, you have to do it that way. Skulls! Okay, they're skulls. I'm studying Stoicism. Yeah, luck. I don't know about luck. Anyways, yeah, my wife hates them. I like the detail. Like even the clasp is cool, huh? You see the clasp? And the skulls, they're just, I should probably flip them around, but see, I like them facing me. There we go. Okay, I like them facing me because I can see them. All right, so yeah, I'm studying Stoicism, and there's this idea that you need to live for today because our days are numbered. Is one way of looking at that. Okay? There you go. Yeah, Mohammed knows Ryan Holiday. Yeah, for sure. For sure. I got some of his books somewhere. Yeah. Memento Mori. Yes. Yeah, so it's kind of like that was, it's sort of a reminder that we do have limited time, and humans don't have a good grasp of it. There's sort of today, tomorrow. Whoa, look at that camera moving. There's today, there's tomorrow, there's the next day, and time just kind of drifts by. And one day you look in the mirror and you're old. And you could waste 10 years. It's amazing how, you know, you feel like when you're young you can live forever, and then all of a sudden when you're old you're running out of time. So it's, you know, it's I'm just trying to remind myself that I can do more, I can be more, I can try more, and that's in many different ways. So, but I have to do it now. So that's why, as I've been studying Stoicism, you might notice that I'm trying to do a lot of other things too. I'm being a trader. I'm doing consulting work. I'm doing the coaching every day. I'm starting a super secret fundamentally based alert service. I got a book club that I'm developing because I got some ideas for that. I'm starting the process. In fact, I have a meeting today with a publisher to start a series of books. I have about 6 books in my brain and a bunch of other things. You're like, holy crap. Yeah. Well, it's because I'm running out of time. I'm running out of time. So I got to make the most of today. And I'd also like to do, I'd like to do a conference at least once a year where we all can get together as currency traders and inspire each other. Okay? So, yeah. So I might be doing too much, but I'd rather die trying too hard than dying with regrets, I suppose, huh? Time doesn't exist, a matrix, and I kind of like that. I like that. It's a construct, a human construct, time, right? So anyways, that's it. That's all. That's it. That's all. All right. So that's how we got here anyway. So, Jack has a question about Fibonacci, right? I've been watching FX Bootcamp and I understand it. The only thing I don't understand is where to draw it. Oh, yeah. Easy peasy lemon squeezy. But before we get to that, let's just look. Aussie on the long run is still weak, but has popped up a little bit. Kiwi has on the long run been weak, but is stabilizing. So we have some stabilization going on here, probably related to this US dollar weakness. Okay. Yen is super, super, super weak. Okay. That fundamentally makes sense, but there are skinny bears lurking behind the trees. Be very, very careful. Euro's ripper strong, in particular, probably again, based on US dollar weakness, and pound all over the place, right? Which is fine. And you're like, but Wayne, this seems like mass chaos. Well, it is. So if you're over trading right now, then you need to I don't know. So here's my worry, and Morena points this out too. Thank you, Morena, for the comment. Morena says, I can't believe so few people here are interested in yen. Yes, it is interesting, isn't it? So I want to emphasize that if you trade the same thing every day, you're not making the right choices. If you only trade dollar, then much of the time you're going to be correct, but then in many other periods, it won't be the right thing. So you have to be careful. It is a bit shocking that the dollar's not doing a lot and you're skipping the yen. You're like, whoa, whoa, whoa. So like yesterday in the day trading group, that's what I talked about, where, as the day trading group discussed, sort of neutrality on dollar. It doesn't seem to be going anywhere right now, and certainly not the right direction. But meanwhile, I'm like, you kind of are forced to trade the yen. Okay? But do it cautiously, do it carefully, right? Use stops, for example, keep them close, be able to move them quickly because we are on intervention watch. But nonetheless, be careful. You should really understand the fundamentals, right? Now, Johnny mentions the super secret fundamentally based alert service is saying, hey, neutrality on the yens. And that's kind of what we're getting to as well, where you have to look at the neutrality and then kind of look out, is it going to neutrality to bullishness or neutrality to bearishness? Because you're not likely to stay at neutral. And the neutral idea also is showing you that you got to be careful because there's a likelihood of a change in direction. So let's say all the yen pairs have been up and up and up, but the fundamentals are changing. You got to be cautious that suddenly there's a change in direction, at least technically, right? Okay. So anyways, yeah. So just be careful. Make sure, whoa, the camera's all over the place today, huh? Just make sure you're not habitually trading. I'm not saying what you're doing is right or wrong, but just make sure you're not trading something habitually. It's just something that you'll always trade. Oh, I always trade euro dollar. Well, be careful of that. Okay. Okay, so we have a question about Leonardo Fibonacci. So why don't we just randomly pick something here? Okay. By the way, this could be a sell. All right. First of all, one big mistake, and whose question was this? Jack. Hey, Jack. One of the mistakes that people often make with Fibonacci is they don't use it in the right market conditions. So, Jack, if you're still here, give me an example of the wrong time to use Fibonacci. Okay? What kind of market condition would Fibonacci be inappropriate? Correct, in a sideways market. That's right. So you got to have a trend. Okay, cool. So one of the things we could do is say, okay, that's a breach, okay, of a sideways market, for example. So the market was trending sideways and then it broke out. Okay. So how do you use Fibonacci? You take the low and to a high. Okay. And what I care most about, oh, let me get my drawing tool. What I care most about is the range. Okay. All I really care about is this area in here. Okay, in that area, I can buy or in this case, I could sell anywhere between the 382 and 618. I'm not really particular of where or which one because I don't know in the moment. And if you sit around and wait for 7 levels of confirmation, then you miss the whole point. Okay, because by the time you have 7 levels of confirmation, well, dude, you've already missed the retracement. It's already extending, right? And you're basically selling at support. So if you're going to sell at resistance, you got to do it. So what does that area actually tell me? Well, when one of those lines holds, the 382, the 50%, 618, it just projects an extension. Okay, that's all it does. So let's put this into a scenario. Okay, when we're down here, that's a lower low from a swing. And then once you're down there, you say to yourself, I'm going to sell somewhere between the 382 and 618. You say that when you're down here on the lower low. I do the same thing with price action. Fibonacci is simply price action. That's all it is. So if you're like, I never want to use Fibonacci, I only want to use price action, then this works the same because they're the same thing. Okay? But the nice thing about Fibonacci is they give you a kind of rules of thumb, if you will. If the 382 ends up being what holds, it predicts, or sorry, the 618. Sorry, that's the 618. If the 618 holds, it predicts a 1382 extension. Did you know that? Look at that. That's in my book. Please buy my book so I can be filthy, stinking rich. By the way, it's not even my book. It's Wiley Publishing's book. So make them filthy stinking rich. Whatever. My point is, you know, I wrote a book in 2007. I think it was published in 2008. And it says a 618 predicts a 1382. How nice is that? Okay. Now, one thing that might be throwing you off is you might say, oh my God, Wayne, I think you're drawing your Fibonacci upside down. I am, actually. I'm drawing them upside down. Which in a way proves that I'm self-taught. Back when I first started trading Forex, there were no Forex gurus. There were no Forex books. There were no Forex training courses. Amazon.com was a tiny little startup. Okay? They only sold books, but they didn't have any Forex books. YouTube wasn't invented yet. That's how long ago. And just a few foreign exchange brokers existed. Otherwise, you had to basically, it was up to Goldman Sachs and JP Morgan to do Forex trading. So I started in a period where there was no information. So I looked at Fibonacci. And Fibonacci, okay, where'd my drawing tool go? There it is. Okay, let me move that over. Okay, Fibonacci, you're supposed to draw it this way. And I never understood why. Now you get these lines, but then the projections are this way. But I'm a bear. So I never really understood that. And I think you were supposed to study one way for retracements and one way for extensions. But honestly, I have no idea how anybody else trades. I don't know how anybody else trades. I don't know how anybody else uses Fibonacci. Isn't that it's a joke. It's funny, right? I don't watch other people on YouTube. I don't read other people's books. Now I'm going to change that. I'm going to start reading other people's books. I just don't, honest to God, I have no idea how anybody trades Fibonacci. I only know the way I teach. And because I taught myself, and that's the only way. So what I did, I'm an entrepreneur, right? So I quit my job as a VC to become a foreign exchange trader. And so as an entrepreneur and investor, my whole idea is to take whatever exists, pull it apart, understand it, and put it together in ways that makes most sense. So I looked at this and I'm like, I hate drawing it twice. I don't understand that. So what I did is I flipped it upside down because I studied the math for a while and I realized Fibonacci is not that smart. I don't know why people make such a big deal out of it. Okay? 382 is the same as a 618 based on ratios. And 50% is not even a Fibonacci number. A 382 is the same as a 618. So I'm like, it's just a pullback. In fact, I could change this. Look, right? I'll change this. Let's make this 66.33. Do you think trading would change? Do you think your results would change? Do you think anything would change if I decided to not use Fibonacci? Instead, I'm going to do 1/3 retracement, 1/2 retracement, and 2/3 retracement. Do you think anything would change? Huh? I can be more specific. 1/3. Okay. Nothing would change, right? Nothing. So don't even get caught up. I laugh when people are like, well, if you look at the pattern on a tortoise's shell, it proves you can make money trading Forex. I'm like, are you mentally deranged? Are you mentally deranged? Do you really believe that? Oh my gosh. Okay, what a ridiculous. And then of course gurus teaching it are 10 times worse, because if they knew anything, they would know that that's ridiculous. So anyways, I don't care about Fibonacci. But what I ended up doing is I started looking at patterns. And I looked and looked and looked, and I realized there's some sort of, the more it pulls back, the less it extends. The less it pulls back, the more it extends, because what you're actually looking at is the strength, or let's say momentum, of a trend. Okay? But then using this tool, it projected the wrong way. So I manipulated the tool to get it to do what I wanted it to do. Now to do that, I had to then reverse engineer everything. I had to say, I want, the extensions to be in the direction of the trend. Now to get the extensions in the direction of the trend, I'll simply just flip the 618 and the 382, because they're the same based on ratios. So look, because I draw my Fibonacci upside down, remember I did this 20 years ago. And the only way I could do it is figure it out. This is why I'm either an idiot or a genius or somewhere in between, right? So I'm like, you know what? It's the same. So the algorithm is measuring a 0.382 retracement, but I'm like, no. Because I'm going to draw it upside down, in the description, call it 618. 50% is 50%, no matter how you draw it. And then if you're going to measure 0.618, because I'm going to draw it upside down, just tell me it's a 382. It doesn't even matter, because it's the same, right? If you go 100 minus 618, it's 382. And then if you go 100 minus 382, it's 618. It doesn't matter. It's the same ratio, anyways. And then because of the way that the algorithm is written, the actual code, now it says, well, what extensions do you want? Well, I want a 618 extension. I want a two 618 extension. I can do a 4, but I also want a 1382. Okay? And so it draws it. But remember, normally it would draw it above the trend, but I'm doing my trend upside down, so the projection now is in the direction of the trend. Okay, you either just got what I said or you didn't get what I said. There's nothing I can do about that. But it's doing the normal sort of math, if you will. I'm just tweaking it so it saves me time. So instead of drawing one for the extension and one for the retracement gives me the projection all in one tool. And it's really strange, I think, right? It's really strange. But again, I don't know how other people use this tool. I'm not joking. I've never seen someone else use Fibonacci, ever. Okay? So that's how I use it. Okay? Now they are very, right? They're subjective in a way, but you can see that there's some level of help. They're let's say useful, right? Where just the general idea is a retracement in that zone will get you somewhere in this zone. Okay? Okay? But you don't need Fibonacci. Okay? But you know what? Fibonacci is useful because it's a form of price action. Like Elliott wave is useful because it's just price action. And you're like, no, Elliott wave gives you all these other things. Okay, some guy, he looked at price action, he looked at Fibonacci, he looked at what I would call frequency. But again, if you Google frequency, you're going to get a different answer because I'm self-taught. So what I'm talking about is how the market tends to expand and contract. That's why I call it frequency. And I noticed where, these things expand, and then contract based on sort of the maturity of the trend. And you're like, oh my God, well, you just described Elliott wave. Okay, fine. Use Elliott wave then. But Elliott wave is just kind of doing the same thing. There's a trend. The trend becomes new. Then it expands because everybody is now trading that same trend. And then the trend starts to mature and get old. People start taking profit and getting out of this trend. And we move into a period of consolidation or a pullback. But once again, the fundamentals kick in, and the short-term counter trend leads back to a longer-term fundamentally based trend, and we repeat sort of the new trend, the expansion of the trend as everybody gets on, and the maturity of that one. And you're like, well, it's just how the market moves. So, it's sort of like they're all describing the same thing. One guy's pulling on a trunk and the other guy's pulling on a tail, and the other one, but the elephant is the elephant. So I tend to not get too caught up in any of them. Okay? So no matter what you use for your sort of trading methodology, we're at support, and you probably, right, should pay attention to the support level. So right now in my world, there's only two prices that matter. This price and this price. But that's why we talked about it yesterday and the day before. You're welcome. Hey, that just happened. Would you be so kind as to click the thumbs up button? Just tell YouTube this is awesome. Cool. Okay. Here we are. We had our bottom. We had a higher high. We had a higher low. Then we have a higher high. And this one is actually in a possible counter trend zone. Okay? It's possible. Remember, that doesn't mean it will happen. It's possible that because we're in here on a Tuesday, if price decides to turn to the downside, then it would be meaningful. Okay? If it rolls over, then it's meaningful. But what I discussed on, I guess it was Sunday night in the day trading group, we were here and we were here, and I said I was neutral. Okay. Okay, that's it. So now we got to measure it. So we can do something like price action pivot points. And I would look at that and say, on this daily chart, we have approached one standard deviation from the mean, and I'm still able to engage as a bear. You understand? The short-term trend is up, the long-term trend is down. So the best model I can give you is that something like this might occur. Might occur in the near future. It could, it may not. But if I'm going to be a longer term trend trader, then I need to wait and observe a reversal and then trade in that long-term trend, targeting one standard deviation below the mean. Okay, this whole area here you should know is my sell zone for the month of October. Now, that's an N. I'll do there. E. Okay, that's a sell zone, and I know I'm under threat because that's the buy zone. So that's why I'm neutral and I'm positive. All right, I'm neutral and I'm waiting. All I know is bears sold and bulls bought. Who's going to make money at the end of the month? I don't know. Okay, cool. Monday said, Wayne, I was in that stream David is talking about. Please enlighten me. Which David and what were you talking about? Okay. I'm looking at this, and the first thing I think about is selling, probably around 64. But it could be as high as 66, really. So I'll have to wait for a while. Richard says risk on in the market. Yeah, for now. The thing is, you have to decide, and I say this all the time, but it needs to be said all the time. You need to decide whether you're a bull or a bear. Will I be taking a look at Bitcoin? Yes. So, for example, Richard, I'm predominantly a bear right now. Okay, on the way down, well, actually at consolidation at the bottom of these downward moves, I got taken out of the market with profit. And I've done very little since. And so now my job is to wait. And if I'm wrong and there's been a complete reversal in the market, then I will not get very many opportunities to trade. And when I do, I'll take small losses. So not the end of the world. And if I'm right, I'm going to get on some trades and make money again. And I'll continue to be right. Okay? So right now, my job is like, if it's risk on, then I'll probably won't trade until the end of the day. And if there's some profit taking at the end of the day, well, I'll get short some markets. Okay. Monday, I asked you a question. Okay. That's why, so I'm waiting. I'm not sure what your question is or which David you're referring to, but you said, hey, Wayne, I was in that stream. David is talking about, very interested in your answer to that question. Is the 4 hour where you decide key levels you execute on that? So let me try to guess. Are you talking about David Pegler on FX Street? I believe he still does regular live streams there. Okay. I think that might be what you're asking. And I think that and if so, I'll answer it this way. I taught David how to trade. So the answer would be yes. Okay. So in my opinion, all trading is based on 4 hour or daily. Which one? Whatever. Okay. Okay. What I do on a daily, for example, it could be a 4 hour, it's just as fine. Okay. This is strategy. Okay? Strategy. Remember, I wrote a book called Strategic and Tactical Forex Trading. So when I'm looking at a longer term chart, maybe it's a weekly chart. If you prefer weekly, it doesn't matter to me. 4 hour, daily, weekly. You are looking at the market, right? You're looking at the market from afar. And you're making decisions. You're like a general on a horse and you got binoculars or, right? I don't know if they had, but anyways, you're looking at the field from afar and you're making strategic decisions. Where do you attack? Now, you're not talking about like how to use a spear, how to use a sword, okay? That kind of stuff. You're deciding where on the battlefield do you want to, what part of the battlefield do you want to capture? Well, obviously the high ground. And what are the strengths in that position? And what would the weaknesses be, if the enemy attacked you there? And how would you formulate sort of your how do you lure them in and all that kind of stuff? It's strategic. So 4 hour, daily, weekly, whatever, dude. It's your strategy. Okay. So now from this point, I could have a strategy of attack here. That's why I drew it for you 2 days ago. So now it's tactics. So I can drop all the way down like a 15-minute chart. I could even drop down into a 5-minute chart. And I'm only engaging now because of what I saw in the daily chart. So I could, for example, go pachow. Okay, put a little scalp on it, and I'm done. I just traded the daily chart. You're like, no, you didn't, Wayne. You just traded a 5-minute chart. Oh, is that right, eh? No, I didn't. Okay, so when you're on a 5-minute chart, there's no strategy. I'm kicking down doors. Okay, I'm putting ammo into targets. There's no strategy. That's what the general did. Okay, I'm clearing a building out of bad guys. There's only tactics at that point. Okay? Okay? Living in the wicks. That's right, Johnny. Okay? So that's that. That's how you do that. Okay? So you do that. Easy peasy lemon squeezy. But we don't know if that's fundamentally sound. We also know that the bottom here is crazy, ridiculous support. So it might be the right tactical entry at the wrong time. Okay? Okay? And so we could look at this further and say, oh, this is neutral. Isn't that interesting? Well, we're looking at commitment of traders report as far as, okay, institutional positioning, retail positioning. We're comparing GDP, inflation, unemployment, interest rates, but we're also doing technical analysis. And this has gone from a strong sell to a neutral. Which is telling me, look, maybe on the long run, I'm correct on this trade here. But in the short run, there's some challenges to that theory. And if I back out, right, we know there's one here. I'm just seeing if there's anything else going on. Then there's that. We're at the 2020 low, and that might be a problem. Well, that's why the algorithm already said, dude, you might be super early or super late. But super early and super late rarely adds up to super profitable. Okay. So David says, so is the 4 hour better than the 1 hour for finding levels? Yes, of course. Because you're not getting any strategy out of what you're doing. You're just so focused on what's happening technically that if you rely on the 1 hour, very often you'll put up trades based on what used to be happening. Okay? Do you understand that? I want strategy and then tactics. Okay, so look at a higher time frame, make a frickin' decision. Are you a bull or a bear? I don't know. Then stop trading. This is Kiwi dollar. Okay, that's that. So sell it at resistance or don't sell it. Buy it at support or don't buy it. What's the problem? The problem is you don't know if you're a bull or a bear. You need to solve that problem. Okay? You need to solve that problem. Thank you, Hope. Right on, David. Luis got blocked, but yeah. Right? Yeah, right, Luis? Yeah. David never looked at fundamentals. You know what? I think, well, we'll just leave it, I don't know. I'm putting together a presentation. I don't want to do my presentation before the presentation. But that makes sense to me, David, is all I'm saying. That now you know more and you're doing better. Makes sense. Richard says, what about last night's CPI? Isn't that bullish? News, are you listening to me? News is not fundamentals. Unless it's a central bank that just announced a new policy, then it is fundamental. What about last night's CPI? What about it? Okay? What you want to look at is the trend in economic data, but the economic data itself is not that important. Okay? And the only reason you look at trends in economic data is to discern what a central bank is going to do next. It's the only thing that matters. If you use fundamental analysis, it helps you understand the flow of money globally. So a one-off CPI is irrelevant. Non-farm payrolls, irrelevant. It's irrelevant. So what is relevant? What's relevant is the central bank is trying to cool off the economy. Okay? And CPI is not cooling off. You understand that? So what's relevant? Two pieces of information. What the central bank is doing and what the central bank is going to do next. So people are like, oh, well, the Fed's going to pivot. Pivot? Why? Why would the Fed pivot? That's the only thing that matters. You see? And I'm telling you, the talking heads on TV are not a good source of information. Okay? So, anyways. Cool. And all I can say is I have developed the missing piece. I'm still developing support tools for it, but I can fix your trading. It's like I can give you the missing piece is the better language. Fixing your trading, that's an arrogant statement. It's not what I meant. What I meant is I have the piece that you're missing. See, if I said I can fix your trading, it means you're broken, right? Or your trading is broken. I do not believe what you're doing is wrong or broken. But I believe there's a missing piece. And I have it. I've been trying to teach it for 20 years, but now I have something I can offer. I can offer the missing piece now, and that's what we'll get to. All right. And many of you already have it. Okay, so anyways, Jens or Oscar Mike, be careful, profit taking, profit taking, profit taking. Okay, we have lots of profit taking prices that we're at. We're also less than 100 pips away from intervention. Okay, so be very, 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 very careful. Be very, very, very careful. All right, so let's do gold, oil, and Bitcoin. Okay, this is called demand destruction. Okay, so if you recall, and I hope you do, when we were up here, I drew 3 prices. Maystad, I expect the market to come down to that price, this price, or this price. And at one of those prices, I'll probably end up buying. Now, which one? I don't know. How could I possibly know? It's impossible. So again, wrong question. How did I know that? I don't know anything. But up here, the information I shared was that there's going to be a pullback. How do I know that? There's always a pullback. Well, what about the continuation back in the long-term trend? Well, that I don't know. So I said way back here, this would be, okay, opportunity A, this would be opportunity B, and this would be opportunity C. Now, how do I get to those prices? Support, support, support. See, after a higher high, I buy at support. Okay? Capiche? After a higher high, I buy a higher low at support. Which one is it? I didn't know. Okay? I didn't know, as they say in Scotland. So that's where technical analysis comes in. If, okay, remember if, think of it as programming an algorithm. If price comes down to support, and then you see a reversal pattern, meaning price had fallen to support, then you can buy it and have it rise. So you might have bought it in here. Maybe you bought it in here, depending on what you saw in small time frames. Okay, the first one, I think you would have broken even. The second one, you would have lost a little bit of money. So it's no big deal. Shouldn't be a big deal. Okay. The second part would be, okay, now we've dropped down closer to B. So now if I get a reversal pattern down here, that looking like this, for example, or price gets back above the moving average is another classic. Okay. If I see something like that, or like if price holds above B and, okay, if ... and ... If B holds and stays above the moving average, then buy a higher low. Now, how do I get to like the decision of being a bull or a bear? Well, we are in a bearish mode. We are in demand destruction because of central banking policy. You could totally be a bear here. And I talk about it all the time in the day trading group and the swing trading group. That means you're trading the demand side of the equation. And it's perfect. It's perfect. If you're a bear, I 100% understand why. Now, if you're a bull, I also perfectly understand why. Your supply side. So if you don't understand the demand side or supply side analysis of the energy complex, there's nothing I can do for you. You're weak. You have weak game. I'm just going to dunk over you. High flying, death defying, 360 slam dunk. My Nikes are going to leave footprints on your back. It's not my fault. I'm better prepared. Maybe you should take the oil trading course. It's $99. Oh my God. Okay. But there's no doubt. You have to understand the supply side and the demand side of the economic equation here. And from that, you make a decision. I'm a supply side bull or I'm a demand side bear. Sweet. Or you're going to like switch from team to team depending on market conditions, but you understand why. You understand why. It's the entire difference of trading. You're never trying to understand people's rules. Oh, what does this guy say? What did that guru say? What is this alert service telling me? What is that alert service telling me? What about the guy on TV? What about the girl at the conference? You just need to understand so that you're the expert. Stop listening to people. Stop listening to me and start learning. Right? So, look, I look at this and I say things like, well, what about backwardation? So now I got to sit around waiting for the SPR to stop being tapped. Well, that's the problem holding me back now, that the government is manipulating the market. It drives me nuts. It's very upsetting. Negligently dangerous, I might think. Doesn't matter. Because right now, either the supply side's bringing it down because we have more than enough oil, or demand is being destroyed because we're about to slip into the recession. I've shown you how to calculate mathematically using two different equations. So I go in here and I might be a supply side bull. And I would say, okay, if price comes down to B and moves above the moving average, then I'm going to buy higher lows. Okay, buy higher low. Okay. If B plus EMA above, okay, done. And you know what? I don't know if that will make money. But I can tell you it probably won't lose money. Because that will be a valid technical entry. I can't tell you if my fundamental timing is right. I can tell you my fundamentals are right. Do you understand that? There is no doubt. My fundamentals are 100% correct. But fundamentals don't tell you the time or even the price. That's what technical analysis does. So if you're fundamental only, you're missing a piece. If you're technical only, you're missing a piece. The one thing I can tell you, and I'm building case studies on famous professional investors that have made billions of dollars, they don't trade the way you trade. Okay? And I'll show you that. So it's like, no matter what, there are pieces missing but one piece is more important than the other. Okay? So it doesn't tell you the timing. So if I get that technical setup in the direction of my fundamental bias, both will be correct. And therefore, I don't believe I'll lose money. I don't know if I'll make money because then the technicals just put me at the right time at the right price. Look, support is holding and I'm a bull. I bought at support. You won't lose money often buying at support. But it could go up and then collapse and then make a lower low. Okay, I'll probably break even. But if the timing is correct, so I bought at support and it starts climbing and the fundamentals do take over, then the uptrend, I'm buying at 80 going for 120. Well, then it's going to work really, really, really well. Okay. Darko says with some, if December will be warm, what about the price of energy? Well, that would be demand destruction. Yeah. Okay. Demand destruction. So that would bring price down. Or, it's the kind of the same thing where if less demand, then higher supply, and then that would also, so you might have a bull and a bear selling for the same reason. Meaning, a demand and a supply trader and a demand trader both selling. And from different points of view, but for the same reason. What? So I sit, I wait, and I don't lose money. Darko says, asks a question about seasonality for oil. And October to November is down over 20 years and over 5 years. Okay. Okay. From October to November, the 20-year average and the 5-year average are both definitely down. Okay. And the reason for it, okay, the reason for that pattern is that oil refineries go into maintenance in October because they're preparing for their season of buying WTI or Brent, depending on where in the world they exist, and then cracking or blending the products or the feeder stock into products. So they might need to make, let's say, start making gasoline in February, or jet fuel, or plastic, and all that kind of stuff, because there's normal supply and demand for those types of products. There might be peak demand for plastic. There might be peak demand and trough demand for jet fuel. And for gasoline, we know that peak prices tend to happen around June for gasoline and oil. Peak. That's where you take profit. So there's a trough somewhere, let's say before June. So where? Well, that's for you to find out. If you knew that, you'd be rich. Okay? When you're like, well, how do I figure that out? Isn't that your job? Luckily, you can easily figure that out if you have the right tools. I know. I know that you know. I know, baby, do. Beep, beep, doo, doo. It sounded like Yellow Ledbetter. Excuse me. So that's that. Whatever. Okay. Keep winging it or become a master Jedi. Master Jedi. All right. Here he is. Where are we going? I don't know. I didn't know. What do you think? Does that look like up to you or down to you? Well, it depends on what you're measuring and how far back you're going. So looking at a daily chart, I can tell you that just in the last couple of days, last few days, let's say, all we've done is kind of, fart around a little high, fart around a little low, and nothing much is happening. We're basically at the mean. Okay? The average price. Now, there's going to be a lot of lines here. I'm sorry. Okay? This is where bears will sell. Bears will sell there, and bears will sell there. If you don't know that, then you don't know some basics of trading. Join FX Bootcamp. It's $88 a year. If you don't know that, you just don't know how to trade. Not my problem. The resources have been made for you. Spend the $88. Okay? Cool. Bulls will buy at this price. It's also the mean. Okay? So there's really, using technicals on the shorter run, there's not a lot going on here. Okay? We're below where bears sold. Okay, we're above support. We're kind of in the middle of the range from, let's say, the lower support or, this area here. So let me draw it up. When we're looking at this range, we're kind of in the middle. It's kind of worthless. Now, when we're looking at the longer term move, that's a sell zone. This is a buy zone. And we're not far from the middle of that, as I already shown you. So this is sort of a dead market to me. You understand? Sean says, it looks like we're accumulating longs. Yeah, longs that will probably, statistically speaking, I'm talking about probabilities here. Yeah, you can start buying all that, but going back to August, there's a lot of downward pressure here. Okay? And so if you were a bear, okay, this area here is obviously a sell zone. Okay? And I'll be blunt again. If you don't know that, then you don't know how to trade properly. You don't know the basics. And you should get on that. You can improve it. It's not a big deal. You can improve that. You can improve. You need to improve. Okay? Now from there, if this global economy goes into recession, this will fall. So position yourself the way you want to position. You might say, Wayne, I think everything's overblown. We're not going to go into recession. Okay? inflation's going to fall and people are not going to lose their jobs. Oh, cool. Well, then you're a bull. And that's where we're going. So you do you. You do you. Okay? And I'll set up my trades. Okay? Sean says, well, what if fiats keep crumbling? Well, then you're probably going to buy the dollar. I've been buying the dollar all year. It's been great. Love it. Okay? It'll be the last one standing. Why? You're like, it's the worst. Yeah, well, it's the only reserve currency, so it's almost like by definition. You know what I mean? So anyways, guys, I'm telling you, you're the way to break through. I know you sense that you have greatness as a trader. Otherwise, you would have given up a long time ago. The part you're missing is your decision making. I think you have the skills. But you're missing a piece, and that piece is how you will. The piece that you're missing gets you to be. It gets you to a point where you make a decision, and once you've made a decision, I'm telling you, your consistency will go up, and your confidence will go up because you have control of what you're doing. That's what I said in my book in 2008. So we'll get this fixed, okay? This thing meaning the process. But I know you can do this, and I want you to be able to do it. I have plans for you. There's a future for you. The world needs you to succeed. I know hedge funds that are going out of business right now because they don't have the type of flexibility that a Forex trader has trading the spot market. And I can tell you many other types of funds, whether they're other types of hedge funds like long only and growth only and all that kind of stuff. They're probably real estate is going to have a tough few years. There's a lot of different types of traders that are having trouble, and you just happen to be focused on the right one, the right kind of asset class. And when those other models kind of become unfavorable and those firms go out of business, there's going to be a vacuum, a void. The money needs to go somewhere. It might as well go to you. But I bet you right now you're good enough skill-wise, but you're not consistent enough, and there's something holding you back, and you know it. You know it, you sense it, you smell it, you think about it at night. You're like Neo. You've been down that road before, and you can feel it. That something's wrong. Blue pill or red pill? Peace on earth, may the pips be with you, may our profits be above average. If you're in my day trading group, I'll see you at 4. Remember, if you're in my day trading group or swing trading group, there's a 2 p.m. meeting for the stop, look, and correct session that we do weekly at Tuesdays. Compliments of the firm. So, busy day. Busy day. You got a meeting at 2, you got a meeting at 4. Holy smokes, eh? But remember, at the stop, look, and correct session, it's all about you We want to know what do you need to improve? So it's not necessarily about analysis, it's how you make analysis, how you make decisions. When do you pull the trigger? When do you move the stop? When do you get out? How do you make those decision processes? So bring your questions, bring your charts. Okay? So another busy day at FX Bootcamp. Thank you for everyone here being a subscriber. Please click the like button on the way out. Cheers.